a great opportunity for both of us to, attract those people. So we are going all out. Initially, it will be every other month, first Fridays, but eventually it will be every month, mostly online, but sometimes during CES or TechCrunch, they'll be in person as well.
Oh, love it. Yeah, we will definitely, let's have a call maybe next week.
Okay.
So we can strategize and figure out how to help participate, but love it.
Great.
Hey, Axel, how are you?
I'm doing fine. So how is Santa Cruz today?
It's 65 degrees and perfect.
Oh, good.
Can't
I'm
complain.
looking out. We have sunshine here, and I think we're going to get to the 70s today. So that's pretty cool.
Awesome. Any travel soon?
No, not really at this point in time. And I mean, there is an opportunity that I may be involved in an event early March in Hartford, Connecticut, but that is still fully up in the air.
You've got time.
Yeah. Absolutely. So, Alex, how are you doing today? We have a lot of muted people that are invisible. And
Yeah, 9 o'clock, so they probably won't sign in before 9.
they are signed in, but anyhow, we have less than a minute right now before I actually record.
Axel, where are you located at the moment?
Playa Vista, that is...
yeah.
West LA.
In LA, yeah. West
Yeah.
LA, very familiar.
No, that's Los Angeles right there.
Yeah.
Because there are so many people that always put the San Francisco Bay Bridge up there.
Oh, got
So
it.
I had to advertise Los Angeles.
Cool.
I think that's the Zoom bias. They don't give me many options. It's either that or the Milky Way, right?
Yeah, I create these backdrops myself. That's the best way to deal with it. Okay, we hit 9 o'clock, Casey. I will start the recording.
Recording in progress.
Good morning, everybody. Welcome to our third masterclass at Pitch Global. And without any further ado, I will hand over the word to Casey for the formal introduction. My friend and partner, joint EIR here at Pitch Global. And we are very honored that Boss Startup Capital is giving us the presentation today, as well as our sponsors from TriNet. Casey, the floor is yours.
Great. Axel, thanks for having me. And I'm really excited to welcome all of you. I'm Kaustav Chaudhary, founder and entrepreneur in residence in Pitch Global. And, we are really excited to have this event. Now, Pitch Global, we have been running mentoring and investor events for almost a decade, us and our predecessor companies. And over the years, our reputation is we are the open source network in Silicon Valley and beyond. That means not only we run our own events, we have been promoters and running events with some of the biggest names. And we have very deep relationship with a lot of other people too, other groups as well. We don't look at them as competition. It's more the co-option model. We are also funded by US government agencies, NorCal, SBDC, and Tech Futures Group to mentor companies in Northern California with job creating potential. Companies Axel and I have mentored in the last financial year has raised almost $50 million. So we thank our sponsors. This is free for everybody, but in life, no good things are free. And so we are getting paid. We are very proud of that we bill our time and, and adequately compensated so that we can go the extra length to create peak learning experience for all of you. We also acknowledge Trinet, our sponsors, and sometimes their representative, Megan Rice. If she's there, she can say a few words as well.
Not yet.
Not yet. Okay. So now, last but not the least, we want to acknowledge Boss Capital Partners. Boss Capital, we love education. There are two types of education. One is which our entrepreneurs and residents provide real time, high level mentoring, that really can't be replaced. However, there are times when founders have gap in the knowledge. Entrepreneurial education is lifelong education. So, and everyone needs it because change is happening so fast in Silicon Valley. What we learned few years ago is obsolete now. For instance, the reality we knew before COVID hit and now is totally different. And the only way you can keep yourself updated is to anchor yourself to some really trusted source so that you can tap into their knowledge base whenever you need it. And even though the market is inundated with entrepreneurial knowledge, now we've looked at many and we work with many as well. But what Boss Capital Partner offers really shines a light because they are entrepreneurs par excellence. They have had 14 exits, including $2 billion plus exits to corporations like Adobe and eBay. So they understand the mindset of large corporations and as well, which we are fostering. So on that note, it is my privilege to hand over the floor to co-founder of Boss Capital Partners, Randall Loveview. And also, I thank you, Axel, my fellow EIR, who in his previous life was US CEO of RVC, a large fund of funds working in Sandal Road. So thanks, Axel. And Randall, floor is yours.
Thank you for that warm and kind introduction. That's so nice of you. And we appreciate being here, and the feeling is mutual in terms of our respect for Pitch Global. Jill and I are working at Boss Capital Partners, and we also have a company called Boss Startup Science, which is the methodology behind Boss Capital Partners. So Casey mentioned our 14 successful exits. We actually have 15 investments. Of those 14 have exited. One is soon to exit in the next 2 years. And the reason that we've had that success is based on this methodology, which is BOSS. So everyone on this call today and everyone part of Pitch Global is going to have access to the courses that we actually use internally within our own portfolios. So everything here is available, including us, to access. In addition, I'll just mention that Axel and I yesterday had a great conversation with an entrepreneur and founder who was on a previous event. So just because the conversation ends here doesn't mean that our dialogue has to end. We can continue that after, and I'm more than happy to do so. So without further ado, let's jump into this. We are going to talk a little bit about BCP. I want the entrepreneurs and founders to understand our perspective from an investment case and how to submit your deals to Boss Capital Partners. Then we're going to jump into the specifics, which a lot of this is going to be around investor communication, attracting investors, attracting media, and more importantly, when you do attract them, what do you say and how do you say it, right? So we'll get into those specifics today. Boss Capital Partners is dedicated to investing in post-product market technology businesses. So we're looking for product market fit. However, those companies that are having a hard time on the operations, getting to growth or scale. The reason that that's our thesis is because myself, as well as the other co-founders and partners at Boss Capital, work within the businesses at an operator's level. So Casey was mentioning that the evolution of business, is happening more rapidly than ever. And one way that we differentiate ourselves and, like to think that we have earned the ability to speak on these topics is the fact that we haven't resigned ourselves to just being investors. We are still very active from an entrepreneur and operator's perspective in the businesses. So we could talk high level down to execution. We built this business based off of BOSS, the business operations support system, which we're going to walk through and again, give access to those specific courses. And then the address is below if you'd like to submit your deal to BOSS Capital Partners. Myself, I have 15 years experience as both an entrepreneur and investor. I have worked in very early stage startups as a founder myself. I've also worked in the mid-market and enterprise. I built a consulting enterprise focused on companies between 50 and 500 million, either looking to make entrance into different markets and or hit scale. On top of that, I am an investor as well in BOSS Capital Partners, so work actively sourcing deals and understanding the general entrepreneur founder ecosystem. All right, so getting into this, we're going to talk about attracting investors, right? But before we do, we have to orient ourselves with the life cycle that both investors and entrepreneurs follow. We call this the BOSS Startup Science Maturity Life Cycle. So in this life cycle, there's 7 stages. These stages are defined by your fundraising rounds, right? So there's typically 5 fundraising rounds from pre-seed to Series A that we work with in general. This is typically the plight of a company from 0 to 50 million. Now, in this life cycle, there's 7 specific stages. The first 2 stages are vision and product. These stages are pre-revenue stages. Okay, you are coming up with a vision, typically getting your pre-seed and seed funding in order to make that vision come true, right? Whether it's a services business and you need to develop IP, or it's a product-led business and you need to develop the software technology around it. These first 2 stages, you're working on the business. You do not yet have revenue. Now, after you have your product and you go to market through exit, you're working in the business, right? You have revenue, you have customers that you're managing, and really the clock starts ticking there to determine how big the company is going to be or the general direction that you take. So that is called in the business, but at equal parts, you have to be strategic when you're doing that as well. So in future sessions, we're going to cover that later topic of go to market through exit and how to talk to investors and what type of investors you'll be attracting in that space. For today, we're going to focus on the business, the first 2 phases. These are the pre-revenue stages. And the reason this matters is there are different types of investors all along this life cycle. In these early stages, vision and product, when you're on the business, you're typically dealing with friends and families, angel investors. You might be able to get into the VC space, but rarely are they looking at companies like you at that stage. Because of this, you need to have a specific talk track and a specific story in order to sell yourself to these investors, right? To get them interested. But you can't talk about customers. You can't talk about revenue yet because you don't have that. So how do you sell the investors on an idea, right? The risk is higher than ever at this point. We know that 90% of startups fail throughout this life cycle. A majority of them are going to fail in these first 2 phases. Okay, so for this reason, we're going to dig into this space here. Now, from an investor perspective, right, looking at that life cycle on the previous slide, there's 7 stages there, right? That's a lot of detail. Investors tend to be pretty high level, right, and bucket things or segment things. So we're going to focus on this on the business portion here, right? Vision and product. This is pre-revenue. So in this process, from an investor perspective, I'm identifying opportunities and I'm negotiating and executing my investment, right? What I'm going to walk you through is the difference between how an investor views these phases and an entrepreneur views these phases. And it's that gap right there, that lost in translation, so to speak, that creates this inability for founders to effectively raise capital. I've seen it from both ends. I've been an entrepreneur myself that got access to an unbelievable investor, one I would have never dreamed that I would be sitting in front of. However, I was not prepared at all. I found myself rambling about something loosely related with the business. I was very nervous. I didn't have my story down. I didn't even know the types of questions I should be asking them. Nonetheless, I failed that interaction, right? And I've since learned from it. And now being an investor, I've sat on the other side of the table where I'm very interested in a company, or think I am, but it's the founder's inability to communicate where they are, what's happening in the business or has happened, the strategic direction of the business, and how I fit into that. What is my benefit? What is my upside as an investor? Not being able to communicate that, it becomes very difficult to raise funding. So in the identify opportunity phase here, an investor is first looking at a market and an ecosystem opportunity, okay? Rarely will an investor identify a company and then go the opposite way. So the opposite would be identify a company, and then I need to investigate the ecosystem or the market to determine if this company actually has, said opportunity or said solution for the problem. What happens first is typically investors are focusing on specific market segments. You could find this out by just looking up the investor typically and searching their investments, right? It's pretty obvious to see the trends or patterns in how investors like to allocate their money. So after they've identified the market or ecosystem that has a potential opportunity, now they're looking for companies that are undervalued within. Now, this undervalue could be something that the market is telling them or something that they're identifying based on some insight that they have, maybe a subject matter expertise level insight. Nonetheless, it's very simple. It's not difficult to understand what the investor is doing in this phase. On the opposite end, now the entrepreneur is experiencing a pain or opportunity in the market or ecosystem, right? Guy Kawasaki typically says there's 3 reasons to create a business. One is to right a terrible wrong. The other is to preserve something, or the other is to improve the quality of life through automation or process, right? Typically, we bump into those 3 reasons by working within the ecosystem or working within the marketplace. After we've experienced that and identified either a pain or an opportunity, we then look to build a vision, right? What is the solution for this pain or opportunity? It's this phase right here where you really have nothing, right? You simply maybe have a pitch deck. You still need to be able to communicate this vision and where you are, and beginning with the end in mind, where you eventually want to end up in order for the investor to understand your journey, right? And give you the money. Now, in the next phase here, negotiate and execute, the investor is identifying risk and opportunity and estimating their ROI. I mean, this is natural for anyone. If I'm going to give you money, I'm trying to determine how much I'll get back and when I'll receive that money, right? So these are things, if you know this, right, we could anticipate these things and serve them up to the investor, making the conversation much easier. At the same time, the entrepreneur is identifying resources to develop the solution for the pain or opportunity, right? And resources being people, money, and time. So not all the times when you're first starting in these phases do you even need money, right? Sometimes you just need people and time. Now, unfortunately, money is sometimes required to get those. However, resources is really what you're looking at, and you should distinguish between the 3, right? From an investor perspective, when an entrepreneur comes and just says, I need set amount of dollars, but I don't have a good plan of how I'm going to use it. Is this is this money for people? Is this money for technology to improve process or speed up my process? It's very important to have more than just a number, right? And we'll walk through that in a second here. Now, the next thing after they identify the risk and estimate the ROI, then they're going to determine and or reduce the valuation, right? This is commonly part of the diligence process that an investor is going to take you through. And to be quite obvious, you're looking for gaps, right? You're looking for things that they may have overseen, and you're going to adjust the valuation based on that. After that happens, you're taking a piece of the company, right? Or you're investing in a piece of the company. Now, what the entrepreneur is trying to do is source the resources to execute the vision. And typically, this needs money, right? So let's walk through now the types of questions that you could use to prepare yourself, understanding now the context of what the investor is trying to do in this early stage and what you could attempt to do in order to resolve some of the questions that they have. Before I jump into the questions here, these questions can be identified, and the answers to a lot of these questions are within the courses that are available to you. So the courses take on two roles. One, they educate you, and two, there is a execution piece where you take what you've learned and you apply it specifically to your business within the curriculum. As a result, when you finish a course within the curriculum, the output is sent to you, and this output is typically used by entrepreneurs for either their pitch deck or their board decks. So just a heads up as I'm walking through these questions is a really easy way to solution these. Now, what this is really all about is the investor needs context. And the reason that this is so important is when I mentioned resources, people, money, and time, you're not always talking to investors at these early stages. Sometimes you just need general advisory or mentorship or subject matter expertise to have peace of mind that what you are doing is the right thing. There are a lot of people, including, being on this call today, that are willing to give you information and help you with your business. However, it's a very risky proposition. And we mentioned before that one of the leading reasons that companies fail is because they receive bad advice. And again, I qualified this with saying that people aren't out there purposely trying to give bad advice. It's the bad advice exists because the lack of context that the person giving advice has about the business. Typically, there is more than one way to solution a problem. As an advisor, I'm looking for specific keywords that I can understand, and I'm going to propose a solution. Well, I didn't propose all of the solutions. I proposed one that I thought would be advantageous for you. However, the reality of taking that advice and now executing it, there's going to be a whole bunch of things that come up and context that was missing in order to use that advice. This leads to failure, right? So what I believe is that by having a core set of questions that you could have answers to at any given moment, your story and your company's story, you could sit in front of just about anyone, whether it be an investor, an advisor, an accelerator, right, that you're trying to join. This talk track will help you exponentially in being able to give context to the person you're talking to and receive a wealth of good information from them. So the first is, who are you, right? You need to start as an individual. There's a term that is used often in investing between the jockey and the horse, right? The horse being the company, the jockey being the founder. Typically, you want to have synergy with both, but in some cases, you're looking for disparaging remarks or issues, I should say, from a potential founder or in the business. Maybe the founder is wrong for the business or the business is wrong for the founder. These assumptions are made when the investor has no idea who you are, right? So have your story, have it pinned down within 30 seconds to a minute of who you are, your qualities, your experience, and anything that might be relevant to give context to the investor in terms of why you're having this conversation or why you're executing on this business. Then who is your company? What do you do, right? How do you make money? Who do you serve? These are very important things. When I talk about who is your company, a thing that I like when entrepreneurs do this as sitting as an investor is when they make a comparison. We are like X business that already exists. This helps me understand exactly what I'm dealing with, right? What kind of business this is. Now, who do you serve? And this isn't just who are your customers, but who are your partners? Who are your potential acquirers? The expectation of the investor is that you're able to lay out the market and the ecosystem and identify the opportunities for them across multiple segments, right? You need to be the expert. What problems or opportunities do you impact, right? This goes back to the vision statement. Is it a problem, one, or is it an opportunity? If so, what is the status quo for solving this problem against this opportunity that exists today? And then what is your differentiation? Okay. How do you serve your customers? Why will your customers, partners, acquirers care? How do you make money? And this is very important. Is it a one-time fee? Do you plan on it being a recurring fee? Are there upsell opportunities, meaning you may have a land and expand approach? What is the lifetime value? Will people come back every year? Is it every 5 years? or is it just a one-time transaction, right? These are things that are going to help an investor understand what they're dealing with. For instance, there are some investors that prefer transactional businesses, meaning if you have a business where the sales cycle maybe is to the government or to in the healthcare space, and it's more than 6 to 12 months from the point of contact to contract. And some investors are not going to like that. That takes too long. And in their opinion, there might be too much risk associated with that because there's a lot of things that could happen in the middle. At the other end, there's some investors that prefer not to deal with transactional businesses where there's a one-time transaction consistently happening day in, day out. Maybe they just don't have the experience or just it doesn't fit with their investment thesis. So being able to identify this and explain this very early on is helpful. And one of the tips and tricks I'll get to at the end is it's very important as an entrepreneur for you to qualify out investors as quickly as it is for you to qualify them in. Working with an investor that does not have synergy with you, despite having money, it is a recipe for disaster in a lot of cases. What are the maturity milestones and when will they happen, right? Again, going back to working on the business, I'm pre-revenue. Well, one of the questions I would have as an investor is when will you hit revenue? Are you looking to make this a cash flow positive business? Meaning, will there ever be a point that you break even? Or are we just going to, run it up and do a quick market share where we're infusing the business with capital consistently? Again, this is something to get out and on the table very early on to understand what they're dealing with, qualify in as well as qualify out. How much resources, people, money, and time will be required to hit these milestones, right? What does the business look like pre-revenue as it approaches revenue? And then how does the business change post-revenue? Typically, what you see in a business is pre-revenue, the investment and the org chart is very heavy on shared services, meaning IT, HR, accounting, finance, as well as product and engineering. Post-revenue, then you start to see sales really pick up, as well as service delivery and service support, right? It would be ignorant of an entrepreneur to bring on sales and support services before a product is even ready and available to sell. Now, based on what type of business I'm creating, let's say my advantage is customer experience. The opportunity that I saw within the marketplace was that there is a process happening that has very poor service. I believe I could replicate that process and provide better service. That's going to be my differentiation. Well, what that means is post-revenue, I'm going to need a lot of people typically in order to provide that differentiation. So my life cycle is going to look a little bit different. At the beginning, I'm going to be more slow and advantageous in order to build a great product that customers will like, that won't require a lot of support. And then because experience is going to be my advantage or differentiation in the marketplace, I'm going to have support people. I'm going to have onboarding people, right? I'm going to have a lot of resources available post-transaction to the customer. This is a different type of company and is going to require different investments at different times in order to fulfill the resources needed to experience that. And then what are the realistic and stretch opportunities? There is, unfortunately, because of the 90% failure rate, which if you flip that on its head, it means 1 out of every 10 investment from an investor's perspective is successful. There is a numbers game being played. And it's forcing entrepreneurs to position their businesses as potentially bigger than they really are, right? And this is because if investors, only 1 out of 10 investments work, I need every investment, if it's successful, to make up for the 9 that weren't successful. Thus, I'm forcing unnaturally entrepreneurs to have bigger stretch opportunities. Because of that, entrepreneurs are consistently saying, I'm potentially a unicorn, or I want to be $1 billion business. Well, this may not be realistic, and you may turn off some investors to this as well. So it's important to have what we call backstops. It's okay if you aspire to be $1 billion business, but at some point you're going to have to hit $50 million. At another point, you're going to have to hit 100, 200. You see the process, right? It's important to understand what are those realistic opportunities. Again, the phases of the business growth that will get you from 50 million to 200 million. frankly, a $50 million business to a $200 million business is radically different. The people, the infrastructure required, the types of investors that are interested at that point. So it's important to be able to show this to your investors. The slide that I had before, which is the life cycle, is a great visual to show investors how you plan on advancing the business and maturing it. Again, here is the access to the courses. Myself, Jill, Axel, Casey could provide these to you. And again, this deck and recording will be available after. But I just want to wrap up with some quick tips here. I mentioned this before, always be prepared with your story, personal and company. You are the expert, right? You need to sit down and in some cases, educate the investor on what the opportunity is, where it lies, and what the risk is to get there. Always be prepared with your ask. It sounds crazy, but I can't tell you how many times I've encountered an entrepreneur that just didn't know what to ask for, whether it be along resources, people, money, or time, or just simply advice. Be specific with your ask. Seek first to understand before seeking to be understood. When you're pitching, in some cases, it's important to have the elevator pitch approach. I'm just going to give you my 30-second rundown. But in most cases, investors, they have their own agenda, right? They have their own thesis in terms of what they're looking for. It's okay to ask that first, right? Qualify in or out just as quickly, right? It's important to understand who you're talking to so you could frame your story with the right context. And then begin with the end in mind. Don't leave cliffhangers, right? It's not like a TV show where you want this big buildup and then aha. Start with the aha and then give the details after that. Investors have very short attention spans, and if you don't capture them in the first 15 to 30 seconds, you may have lost them after that. And then questions are good, right? Do not steamroll. You are a salesperson, much like a cold caller is within your sales department. You need to invite questions. You need to show your credibility, right? So it's okay to map out your conversation and plot some questions that that are going to be asked, and work the conversation into those questions for your favor. And then I mentioned the qualify out and in, and that's really it. So Axel, Casey, I'll turn it over to you.
Thank you so much. A wonderful presentation. And if I may share and would like your feedback, I have a big pet peeve. CEOs in startup companies, in my opinion, have only one function. They need to know their stuff. So presentation where they need to look things up on the iPhone, or they stumble and don't have the qualifying answers, seems to indicate to me that they are actually not a master of the subject matter that they are trying to raise funding for. And that seems to be in line with what you are saying, know your story and present it. And you can even pivot 30 seconds, 60 seconds, 5 minutes, 2 minutes. When I am involved with a startup company, after about 2 hours, I can pitch 3 minutes their value proposition at any time of the day. What do you think?
100%. Yeah, 100% agree. And this is, I think what leads to this is, as a founder, I'm going to want to find an investor that knows my space well. And that's where the disconnect comes from. That's a good thing. You should find investors that know your space. However, as Axel and KC talked about before, investors are not operators, right? And they are up at a 30,000 foot view, but they're giving you money because they trust you to be the operator to make those visions and those things happen from a strategic execution level. They can't help you with that. And it would be ignorant to expect execution, operational advice from most investors. Now, there are exceptions. I like to think that we're one of those. However, it's not the case typically. So find investors that are in your space, but you be the expert, right? From an operational strategic perspective.
Randall, there are a lot of great things you said, like at the end, start with the aha moment. That's one of our major philosophies too, which is you have to shape the perception right away so that people look at you as glass half full, not half empty. And people only in the first 40, 50 seconds max one has to do that. But the area where we need some more advice from you, which is, as you said, sometimes you need to start building relationships by asking for advice, even though some of it could be bad advice. So this sounds paradoxical, but change is paradoxical. If something is too logical, that means it's a map of the past. So something which appears ambiguity means we are encompassing some of the future into the present. So I love it. I really love it. And this is something which most people don't get to hear much. So can you expand on this, saying, if I'm an entrepreneur, I'm not fundraising right now, how can I start the process even now, so that when they say ask for advice, you get money, ask for money, you get advice. So how can someone can ask for advice, but keep bad advice at bay at the same time?
By being able to give context. And I think that it's, again, it's not that there's villains out here, purposely trying to throw you off track. The advice is limited to the context that you're able to give on the situation. The reality is when I take high-level strategic advice from someone, I have to look at it and I have to understand that, one, this is a piece of advice potentially out of context. Two, I know once I go to execute this advice, there are going to be anomalies and things that come up that I wouldn't even have been able to give context to, right? We work in a very intricate web within our businesses, and you never know when one lever is going to impact other things, right? If we could always have that foresight, we'd all be millionaires and we wouldn't be on this call right now. So being able to have that specific context and then building the right type of relationship. There are examples, yesterday was one of them, Axel, where there are entrepreneurs that are able to communicate things about their business, accept advice, and then follow up with that it causes me to endear myself to them, right? And their problem becomes mine, and now I'm in their corner rooting for them, right? The reason most of your advisors and mentors and investors are out there is because they're problem solvers by nature, right? We have fun solving these problems. This is our idea of enjoyment, or else they wouldn't be labeling themselves as a mentor or advisor. So think about that, how you engage someone and get them interested in something that you're doing. You're able to give them the passion behind what you're doing. You're able to give them the context behind what you're doing. And then you're able to show actual follow-up. You gave me this advice. I did this. Now what? Right? I feel completely engaged at that point and almost on the hook to help you, which is a good thing.
Or you can see the opposite. I have a couple of cases here. They were reached out or introduced. I give advice and say, you need to do this, this, and this. And there's 3 weeks no follow-up. You ping them and say, oh, sorry, I had a personal whatever. As an entrepreneur, there's 24 hours in a day. And you cannot even make a response for 5 minutes to somebody who gave you free advice. Then I'm no longer interested, because you don't bring actually to the table what I actually already did. That's also a philosophy of mine now.
Or if I'm just asking, if I feel like I'm asking the same question over and over and can't get an answer as a investor, mentor, advisor, that's frustrating too. And it goes back to you need to be the expert, right? And you need to be able to explain these things. And if you don't have the answer, you need to stop what you're doing. And that's a wake-up call for you, right? You need to go get this information, because the odds of you failing and just running into something you didn't even know existed is extremely high at that point.
That's great. So Randall, now we'll move on to the next phase, where we will listen to whoever wants to introduce themselves. People will give a 1 to 2 minute elevator pitch, and then we will select people among them to give a full-blown pitch as well. So like
Can I make one announcement?
Yes.
In the invite, we had also a form link because we need to review. Casey in the beginning mentioned that this is sponsored event by SBDC. So one of the requirements is that we need to show the feedback of the audience. I sent the link out of a form sheet of a product that's called Airtable. Please, while you're listening in, make already the commentaries, because you saw the main presentation already occurring, and make the feedback so that we get the feedback that we need to continue to offer this program. Casey.
Great. Thank you, Axel. And now I'll begin. As we told everybody, we are mentoring. We are a satellite of US government programs in Northern California, and we are mentoring companies which can create jobs in the future. That's why government is funding this kind of high-level educational programs. That's your tax dollars at work. And today we are going to let everybody have a voice, introduce themselves, and briefly give an elevator pitch. And some people later on who we feel dovetails into the immediate needs of what US government is looking for, they will give a full-blown 6-minute pitch. So I want to start by introducing someone who's a member of this program and someone who really epitomizes the values you give and you'll receive. This is someone, and our mentoring is successful because we pick mentors. We mentor people who also mentor us. So that way we elevate each other to higher levels. And now I want the first person to introduce himself. He is a perfect example of someone we both mentor each other. His name, he's the founder of Blissera, and person is Alex Alexanian.
Thank you, Casey. I don't know about the perfect, but I'll do my best.
All right, this is 2 minutes.
Okay, imagine you could just walk into a transparent capsule and it would magically lift you up. An elevator with no rails or guides, no cables or gears, and no counterweights, just tempered glass. The cabin is hovering in the air, powered by vacuum technology. It is panoramic, compact, elegant, fast, and eco-friendly, with unprecedented safety, 100% fall-proof, fire-proof, trap-proof, scratch-proof, and earthquake-resistant. The market of low-rise elevators is estimated to reach $150 billion by 2030 worldwide. Blissera aims to dominate the market of low-rise elevators with revenues at about 50% gross margins. I'm Alex, founder of Blissera, with experience in building venture-backed companies from start to acquisition. The management team has experience in building $100 billion companies. Now raising $3 million in convertible notes to produce commercial-grade products and go to market this year. So are you ready for your fantastic vertical ride? If so, let's talk.
Great. Thank you, Alex. I hand over the floor to Axel and to pick the others after this.
Okay. I would like that everybody that wants to pitch, after a pitch is over, that they turn on their video so that we can indicate and I can see who is ready. But before we do this, Randall, you have quick feedback for Alex?
That was great. I mean, I enjoyed the rhythm. I like the way you started out, and you sound like you have credibility. I guess, could I ask questions? Is that
sure, please.
Where are you? Where is the business right now? Do you have customers?
San Francisco, California.
No, in terms of its maturity, do you have revenue? Do you have customers?
No, we do. We are a pre-revenue company. We build a technology prototype. I installed one in my house. It's a kind of 4-story prototype. It's working. And then we sit down to commercialize the product. So we did commercial-based design. We filed for patents. We kind of work with vendors that can actually source all the parts, materials that we need, and we're preparing for commercial go to the market this year.
Got it. So the investment that you're raising, is it on product? How much are you allocating to product versus your go-to-market?
Majority of that will be actually to delivering the product to the market and starting the revenues this year. So it's probably kind of the product development. We already kind of invested in the technology development. And the interesting thing is that we approached potential customers to actually see their reaction. And everywhere we go and talk to potential users, we get very excited customers that want to place orders today. So we want to rush our product to the market, but of course, making sure that it's mature enough, be ready for the market. So we are looking for a very good revenue start.
I can testify to this. I introduced him here in LA to a builder, and he said, I want to order 3-4 for my building projects in Germany. So once a product is ready, the orders coming in is not a problem. So there is pre-market validation already available.
And Axel, we also have one of our newly favorite person here, Peter Perez of Harris Digital, who we met in our event in Vegas as a part of the Hungarian delegation. And our board member, Laszlo Horvath's fund, I think, invested in them as well. So Peter, why don't you are next, and then Axel, hand over the floor back.
Absolutely. Peter, give us your 60, 120-second pitch.
All right. So yeah, actually I spent more than 20 years in manufacturing, 3 years of that at Ford Motors company, visited many suppliers. My role was really to improve their productivity. But wherever I went, I always experienced that, if you want to improve, you need data, clear, accurate data for, knowing where you are to improve from. And that was not available. If it was available, then it was expensive to generate, or it was manually generated, so people cannot really react on problems. And this is the problem we are solving. So we have developed an artificial intelligence and IoT-driven solution for machine digitization that works for any production machine in any industry. It's more like a smartwatch for your machine. So it detects the signals and give you essential information that you need to react on if you want to cure your health or your productivity, in our case. So we are on the market. We are serving 50 customers. Now I'm in the US for a month now. And great news here, Mexico started to deliver. Houston is opening. We are now having customers in China, Sweden in the meantime. So I'm having a very great time here I think by that I'm closing now.
Thank you. Randall.
Oh, that was great. Have you been on here before? Did we see you last week or the?
Yeah. Actually, absolutely.
That's cool.
I sent you the pitch deck, Randall, as well. I'm not sure if you had the chance to.
Yeah.
Any question?
No, I think the industries you mentioned that it's viable for multiple industries. Of your customers, where are they centralized? What industries?
Yeah, actually, geographically, I mentioned it's growing. So we are at 3 continents, from China to Mexico, including USA. And we are serving many industries. The technology enables us to serve plastic injection molding, CNC machinery at the high tech, but very unique that we can serve lower tech industries like, metalworks and even furniture and food and packaging.
Yep.
The one feedback I liked after I listened this time to you, you basically spoke about that you can connect any type of equipment. You have AI, you have this, and these are all features. I would start out with the benefits. Why am I caring that you connect all the machines? Why do you need AI, and what's the outcome? Does it save you 50% of breakdown time and so on? Benefits before features.
Absolutely. Very valid point, Axel. Yeah.
Thank you.
I missed that.
So we go to our next presenter. I think Andrew Ritter, you are ready for your 60-second pitch.
Okay. Nice to meet you guys. Mover began when I was in real estate, commercial real estate, and I gave a short breakdown with Axel then, but we're moving and shipping. A person comes into their home and they take a video of what they need moved or shipped. We then assign it to the mover or shipper most qualified for that specific job, and we can turn back a quote. The key here is the saving of time, significant amounts of time. Instead of having to wait for 2 weeks to organize a schedule with the mover, they can do it that night, that time. They also have video. That the video enables people to review and evaluate and also share resources to become more efficient. If they're able to share drivers and warehouses and tractors and trailers, we've learned they're able to be more efficient and get jobs done that would otherwise be sitting in a warehouse, which we experienced for 2 months. So we've connected, we're utilizing an old archaic industry and connecting modern technology to it to beat both the supply chain for the customer and the distributor with shipping, and also with the moving of large goods and furniture.
Randall?
Are you fundraising right now?
No, but yes. It's kind of funny. We don't need money, and I was listening to someone and I thought it was very good advice. I said, Andrew, the best time to go and get money is when you don't need it. So I thought that was pretty good advice.
Let me also say that many companies I meet, especially outside the US, have a mentality that, we can grow by ourselves. It's called natural growth. The one thing you overlook is that anybody that likes your idea and can put a lot of money behind it, let's say freightquote.com likes your idea, can jump into your market and outrace you based on their brand value and you coming up with the right idea. That's why you want to raise money, to accelerate your business beyond the natural growth phase.
Yes. No, there's that. They're going to be competitors, and that's absolutely, I'm not oblivious to that. We've had part of it has the dealings with the movers and the shippers have been very useful for us. And if they actually have educated us on things that are lacking, things that they really need. And also we get to see problems with the customer themselves. So as you pointed out, and as people pointed out here, we have really two customers. It's like, think of Uber or Airbnb too. Airbnb is a very good example because of the size of it. You've got the host and you've got the customer that goes and stays at that location. We are similar. We have two customers too. We have the shippers, and the movers are actually customers, as if you thought of them as hosts. And then we have the customer that makes the booking. And we've had situations recently which I never envisioned happening, and that's why we're learning as we're going, which has been good, where the movers and shippers have now come to us and said, we've got a job, we've got this, we've got a big move going from LA, the Redondo Beach area of LA, Redondo Hermosa Beach, all the way out to Miami. Never thought we would book it. The shipper came to us and said, look, we need this. We need a guy that has a tractor. We also need a guy that has a trailer. We need expertise. We've got the stuff in the storage. We've got guys that can load it into the truck. We also need a destination warehouse in Miami once we get there, and some guys to unload. Okay, Andrew, mover, can you help us?
By the way, one potential expansion feedback, not that I want to overload you, but this particular moving business. Trucks and drivers are located somewhere and go from somewhere to somewhere else.
Yes.
It is not always feasible to get a return load based on move, but you can get a return load on freight. So they could actually go back from Miami to San Francisco. If you connect in the back end up to a freight quoting system, you can make that extra space available.
Yes, freight is something we're looking at moving into. It's interesting you say that, and we've been talking logistics of how that do is they actually share, by sharing resources, they have shared loads. So it's an interesting situation. By having multiple, it becomes, yes, we are able to book loads, and there are groups, that drivers that have their tractors that want to do one load. Some might say, look, I don't want to drive. This is an interesting example. I don't want to go all the way from LA out to Miami. That's too far. It's too long away. That's a 6-day drive. I only want to go to 3 days. So I'll go to Austin, Texas. Okay. Here we go. We've got this guy. We can go to Austin, Texas. How many guys have we got in the network that are in that area and they need someone going back? Or are they comfortable just going there in the early days and coming back? So it's an interesting thing, but we've got to sort of walk before we run. We've learned from just general booking moves and shipments now from the customer. Now we've also learned from the movers what we need is in terms of being able to provide services for them as well. And then that's what we're in the process of doing. We're building out the technology and building the marketing to properly make people aware that we exist. In the early days, we about a year old, we were booking at what was, I thought was a decent ratio. We're about 1 in 10 bookings. Today, we're about 1 in 3 now, which is at, so people maybe may give you context on that. That's the top of the industry right now. The top movers and shippers in the industry book about 1 in 3 jobs. We're a year in now and we're hitting that mark. So that's very good. What we do need to do is become more aware, be able to grow and onboard more movers and shippers in the locations as we want to grow. We're right now only really able to take people within the state of California. We've done shipments now to New Zealand. We did a shipment to New Zealand, but we are localized and we need to be able to have movers and shippers in all the states so we can properly go. It's a national problem, no doubt about it, and it's a global problem, quite frankly.
Thank you so much. Our next presenter, you want to say something, please?
Yeah, and Andrew, it's more on, I'm going to use your business as an example to make a point, which I think is so cool where you're at in the market space and that example where the customers were bringing things to you. Hey, could you do this for us? I mean, that's a really good place to be. And what that reminds me of is just expansion and contraction. And this in life happens naturally. Also in business happens naturally. And in a contraction, right, where you are bringing services that exist disparate to each other and filling those out and bringing those together. Some call it bundling, right? When you find yourself in that scenario, opportunities will surface. And this is why it's very important to be agile and flexible, because the original vision may be different from what the actual market need is.
Yeah.
And so they may appear as shiny objects, or they may appear as completely foundational pivots in the actual business plan. So it's important to keep an eye out for those. And I trust you're doing that. But bringing it now to like an investment discussion with an investor, one of the things that I really like when entrepreneurs and founders do is how they present market size. And we're all familiar with TAM, SAM, and SOM, right? What is common is for an entrepreneur to use that slide or that section as a check the box, right? I can go to Google really quick. I could find it's $5.8 billion and then kind of, my TAM is 5.8, my SOM or SAM is going to be down to 1.8 billion, right? And so as an investor, I'm looking at that going, so is this $1 billion business? It looks like it is. When is it going to be, it throws everything off track. The way that BOSS suggests to do it and what is in the curriculum is that your TAM is the total available market. Your SAM is what you could do on top or with investment. So with the round that you're attempting to raise, whether it's $1 million, 500,000, whatever it is, if I get that investment, this is my SAM. Without the investment, this is my SOM, right? So TAM is total market opportunity. SAM is plus investment from where I am today, and SOM is no investment. This is where I'm going to. The reason that's important is because as an investor, I want to invest in companies that don't need my investment, because I want to look at that SAM and SOM and I want to go, this person and this company is probably good on their own, but with my capital and my money, I could make them get to where they want to go faster. Those are the perfect opportunities. And in a contracting market or bundling like what you're doing, those opportunities are plentiful. So by framing your situation the right way, you're going to be able to spike the spidey senses of the investors when they hear contracting, when they hear bundling, when they hear, customers coming to you for solutions. Those are all positives. And hit on those.
It's a win-win value proposition. It costs you to get a tractor trailer minimum $5,000 across the country in pure cost, diesel fuel, hotel, food, etc. pp. So if you get any dollar that you can contribute on the empty return right by filling it up, you can be temporarily in the freight quote system 30-40% cheaper than any freight company because you refill an empty truck going out. That's a win-win for the driver, for the freight industry, for the going to market strategy, and the necessity in bundling to get long haul business correctly done. Yeah.
Yeah, thank you. True.
Okay, thank you so much for your presentation. Nin, are you ready to tell us about your company?
Yes, I am. Hi,
Good.
guys.
Takes the guitar.
Awesome. So Snap Relay is raising 500,000 to get 1 million people into tech careers at Fortune 500 companies. My name is Nin. I am an ex-founder of another AI startup that recently raised about 50 million. And I'm on a new journey, another startup in California with 3 other technical co-founders. Many of us are self-taught engineers. And really, we're trying to build the future of e-learning with coding bounties to address the ever-growing gap between the demand and supply of technical talent. There's about 267,000 jobs on LinkedIn alone for software engineers, where US only produces about 65,000 CS graduates. And so we're doing that. We're solving it by making learning more rewarding and offering people, who need more experience to get experience and to be more competitive in the market, a way to work and earn this experience through AI coding projects and Web3 bounties, bug bounties. We are pre-market startup, and our formula has so far resulted in jobs at Microsoft, Amazon, and other big and small companies for 40% of our participants.
Thank you so much. Randall, it's your turn.
That's cool. And that's what a good mission to have, right? To help people get jobs. You said that you're focusing on the tech sector. Describe the profile. Are these people coming directly out of college, people who previously didn't have experience in tech, or is it, just give me more insight there.
Yeah, it could, Randall, it could be literally anyone. We are focusing on tech sector because there's a huge and ever-growing gap. I think the immediate users would be bootcamp graduates, people who want to get into tech, even people who have graduated from 4-year university, because what I hear, most entry-level jobs from our interns, from people who we talk to, job seekers, they require 2 to 5 years of entry-level experience. So they're not very entry-level.
If you are interested in talking to a company that is below your stage, but is addressing green engineers with the specificity of nuclear engineers, because that's a new green energy. They are trying to bring nuclear engineers to the companies that are looking for these engineers, almost like you. Maybe the two of you should talk. This could be something that can morph into something bigger.
Yeah, totally. Would love to chat with them.
Excel@pitchglobal.com. I make the introduction.
Awesome. I will write down right now.
Great. Thank you so much. Daniel, the octopus. It's your turn, Daniel.
Thank you, Axel. Hello, everybody. My name is Daniel. I'm the founder and CEO of The Octopus. We are democratizing food on demand for Latino and minority-owned restaurants so they can have the same end-to-end e-commerce capabilities as some of the world's largest restaurant brands. I come from a restaurant background. I worked there for about 8 years. And in my entire time there, right, I learned that restaurateurs don't necessarily open restaurants to deal with technology services. And unfortunately, over the last 5 years, technology has become more and more part of the industry. And these, minority and Latino restaurant owners are starting to struggle more and more with those services. Now, sometimes they have a geeky nephew, as we like to call them, that handles the, website building, or, they also go and do the Google My Business or Yelp or build menus, or they go with really, really expensive consultants that don't necessarily scale. So what we've done is we put it all together in one service for them. And, all they have to do is ask us to do things for them. Our smart technology will get it done. For the entire period of 2021, we actually bootstrapped the company and we got to 100 clients. And now we're going after a seed round so that we can scale and, just like grow exponentially, right? Like, I think that's kind of where we're at right now. Thank you, guys.
Okay.
That's awesome. I mean, and congratulations on your early success. How long did it take you to get those 100 customers?
It was throughout 2021. So we
bootstrapped.
We started in January 2021, and then all 2021 we bootstrapped the company.
That's great.
I will do you a favor. I was on the board of a Russian company that didn't make it because of COVID and everything else. But what they had is any restaurant that had any form of presentation on Facebook or anywhere else, they can scrape the internet, auto-create menu and an app in which they can directly go to the customers. If that's of interest to you, write me. I will make an introduction and we'll see whether there's anything to be done together.
Yeah, so we already built all the technology and everything. And, the reason why we're going after funding right now is because we actually want to scale, not necessarily so that it can keep us afloat or anything like that. Like we could probably stay afloat doing what we're doing, but that's not what I want. I want exponential growth right now.
Absolutely.
That's great. And also, where are you located?
We are located in California. So we have restaurants throughout the Bay Area and the Central Coast.
And Bay Area, that's where you're headquartered.
Mm-hmm.
That's
correct.
Great. Are you part of any accelerator? Food accelerator?
Yes, actually. Yes, we are part of a local accelerator right now. The company is actually located in Santa Cruz, Santa Cruz, California. So we're part of Santa Cruz Works Accelerator. And so we've had a lot of introductions. We're talking to a lot of VCs, a lot of investors, a lot of angels right now. Currently in the process of getting a VP of sales so that they can scale us growth, right? So we're in the right track, but we're looking for money so that we can, go after the big markets like LA, San Diego, further up north to Sacramento. So
that's great. We are interested in this field for sure. We just hosted Arca Continental Ventures in our recent event. They are a big corporate investor from Mexico, one of the top distributors of Coca-Cola in the world. You're not there yet for them, but we are also advising UC Davis. People who are funding us are funding UC Davis for a lot of food tech and all. So do connect. Can you just email us your deck at startups@pitchglobal.com? Can you do I need to repeat? startups@pitchglobal.com. I think this is great how you're located in Santa Cruz. Boss Capital Partners, some of their people are also located there. And we're working with Santa Cruz County Bank. They were a sponsor and they give line of credit to several companies, but now they are de-emphasizing on startups. But I can see there is some synergy. So please email us your deck at startups@pitchglobal.com.
Just CC Axel at pitchglobal.com as well. Then we have all together, we are jumping on this. Just to your background, I'm a trained chef. That's my hobby. And so I'm very familiar based on that interest of my hobby with the food industry as well. Great.
Fantastic. There's something that we have in common, Axel. I also trained to be a chef. I worked as a chef for 3 years. So yeah, maybe we can, share some recipes later down.
Oh yeah, I'm going to share you with my favorite unusual burrito when we get online that is not done anywhere else that way as I do it. But we reserve for a different time. So contact me, Axel at pitchglobal.com. We take it from there. Is there any other, Brenda, Bob, Rajit, you want to take this a 1-minute opportunity? Otherwise, we switch forward and give 3 companies the full 6-minute pitch time. There is nobody. Then Casey, I suggest that we select Peter, Alex, and Andrew. And if there's time, I would call on Daniel
No, let's get Daniel too. We want to see his
Yeah,
screen.
then
I
we
really
take
like
them all. So Andrew, Daniel, Peter, and Alex, give us your full pitch, please.
Okay, how are we doing this one by one? I'm assuming here.
Yes, it's not all four at the same time. That would be confusing. Peter, you're not yet ready. Alex is not yet ready. So Andrew, get us your deck up and give us a full 6-minute pitch.
Do I load the deck up here? Sorry about this. I'm not familiar.
So you actually share your screen. In the bottom is the green share your screen.
Oh, gotcha. Here we go. I have to.
And now we will be able to see the deck that should be up on your computer.
I don't see it all. Oh boy.
In the bottom, share your screen.
Yeah, I see. Okay, hold
when
on.
you click on it, then it comes up. Okay, perfect.
Okay,
Oh, that's
I've got bear with me.
Okay.
This is going to be difficult to me because I haven't
done that.
Yeah, I have just got so much on, and I've got so much on this screen. Boy, this is going to be very difficult.
Okay, if you need time to look for it, switching over to Alex. Alex is
that's better. Thank you.
You're welcome. Stop sharing your screen so that Alex can take over.
Yeah, thank you.
Okay, let me share my screen, guys.
There we are.
Okay.
The floor is yours, Alex. Wow us.
Thank you very much. Let me start the slideshow. Okay. Hi, everyone. It's great to be here. Thanks, Axel and KC. I'm Alex, founder of Glycera, and today my elevator pitch is about elevators with no strings attached, naturally. I had no intention of going into an elevator business, just building a summer home for my parents to live and my family to visit. Due to my parents' growing arthritis and challenges with stairs, I started a search for an elevator to buy. I searched for all possible vendors, but there was no match to my beautiful house. They were costly, ugly, bulky, noisy, unsafe, with unwanted fumes due to heavy lubrication. So I have decided to build one that is both elegant and safe. Imagine you could just walk into a transparent capsule and it would magically lift you up. No cables or ropes, no pulleys or gears, no counterweights, and no strings attached. This is Glycera, where the cabin is literally hovering in the air with no visual support from the top or bottom. This is a photo at the ground level of the elevator that I had built and installed in my house, showing the hoistway top down and looking at the hoistway bottom up. It is panoramic, compact, elegant, fast, and safe. And it is gorgeous. You don't have to hide it in a closet anymore. We replaced all the metal clutter with just tempered glass and vacuum technology. There is not even an electric cable dangling from the cabin. Excuse me, my phone. So why we think all this matters? There is a new trend emerged in the home building market. It's called growing small, meaning growing vertically and shrinking in the footprint. It is due to higher prices of land growing faster than inflation and lower construction cost of smaller foundation and smaller roof. In the US, for the last 4 years, multi-story new homes twice exceeded that of ranch style. The only drawback are in unit stairs that represent a challenge for elderly, disabled, overweight, and families with small children, which is a good majority of US population. Combining all segmented market analysis will project that by 2030, with 20 million new multi-story homes and retrofit projects worldwide, and with 10% adoption rate, the market of home elevators will reach 100,000 units in US and 2 million worldwide, representing a $150 billion annual business opportunity. Glycera aims to dominate the market of home elevators and become the Tesla of elevators, generating a multi-billion-dollar business annually. So how does it work? A vacuum compressor situated atop the hoistway or remotely sucks the air from the hoistway and creates low air pressure above the cabin. The atmospheric pressure powered by gravity brings the cabin into vertical motion. The cabin docks at the destination floor upon arrival and stays steady during loading and unloading of passengers. It undocks before taking off. The ride is fast and smooth with gentle whisper of the air. We filed a comprehensive patent portfolio with USPTO and PCT patents pending. Some of its amazing features. Gorgeous look and feel with tempered glass panels running from floor to ceiling. Its boltless and clutter-free design is an attraction display and an asset, adding value to the property. It is absurdly compact. On the left, you see a footprint of a traditional elevator extending beyond the cabin by about 500%. On the right, you see a footprint of Glycera elevator with the same cabin space extending beyond the cabin by only 5%. As a result, Glycera is very space efficient and can easily retrofit into many space layouts where other elevators simply cannot. With up to 30 elevations daily, it uses less energy than your home refrigerator. It also generates electricity by turning the compressor motor into a generator and using cabin's drag on descent. It can take a full-size wheelchair. It's fully ADA compliant. Also, opposite side set of doors can accommodate complex space layouts. In an unlikely scenario of the vacuum being compromised and the cabin subjected to thaw, emergency brakes will activate that with double and triple failover redundancy, making it 100% foolproof. It is also 100% fireproof and can help containing fire to a floor it started. As a matter of fact, it can also be used as a fire escape bunker if needed due to its airtight and thermal properties. And finally, Lego style one-day assembly and a small number of wearable parts translates into lower cost of installation and low maintenance. It is practically unbreakable, scratch-proof, fireproof, and fall-proof. It rests on earthquake-resistant pins, withstanding moderate and strong earthquakes. It is child-safe and trap-proof also. It will operate during power outages, so never again being stuck in an elevator. And many more features that gives this beauty an unprecedented safety that far exceeds conventional solutions on the market. Analyzing market players, we have mainstream elevator manufacturers like Otis, Schindler, Kone, ThyssenKrupp, and small home elevator companies. Home elevators usually have poor performance and poor look and are less costly. Glycera technology, on the other hand, beats them all on safety, look, performance, clean tech, and affordability. Many features are better not just marginally, but several-fold. We will manufacture and sell our elevators with revenues coming from residential and commercial installations, both new and retrofit, maintenance contracts, and technology licensing agreements to elevator manufacturers and large brands. Our gross margins are above 50% while having very competitive pricing. About the management team. I have built several companies, among them Ponte Solutions, an MBA company now part of Siemens, and Mosaic Systems, advanced semiconductor memory company acquired by Cisco. Ara was at the helm of Lennar, the largest home builder in the world. Chris is the chair of Life Science Committee at Keiretsu Forum, the largest angel investors network. Dan Maidan, founder of Applied Materials, the $100 billion plus semiconductor giant, and a team of experts with over 20 years experience each in the respective fields of mechanical and electronics design, metal and glass manufacturing, business development, procurement, and accounting. Currently raising $3 million in convertible notes, funds to be used for releasing the first product and starting sales this year. We'll be happy to set up follow-up meetings for those interested to learn more and open for questions, if any. Thanks.
Thank you so much, Alex. And now you're going to hear from the guru, Randall.
Alex, what the heck, man? I mean, you're the Tesla of elevators?
Yes.
This is so cool.
Yeah.
I mean, yeah, wild. One, and not a negative thing, but from your original pitch, I did not understand this. So this is really cool.
Thank you.
It's a storm shelter. It's a fire escape. It requires less maintenance. All of these things. I'm just still shocked. At how neat this is.
It's actually due to my limited time during this presentation, 6 minutes. I did not have time to enter and talk about safety, but I have all the slides and animation and the technology to show you why this is the safest elevator on the planet.
So, Kone and these types of companies, they when you have the patent, they can't build this?
We filed for patents actually, and we intend to license this to some other manufacturing companies. So being mostly technology play, of course, initially we will manufacture it ourselves. We already identified the vendors that will manufacture the custom parts for us. But anticipating a big demand for this product, we also kind of imagine that we will be licensing it to large manufacturers to serve the demand.
I would start. I mean, it seems natural that one of these large, elevator, escalator companies that has considerable market share would be a potential acquirer for you.
We actually, that's great. Yes, we think that companies like Otis can be potential acquirer, but we also think that companies like Tesla or Apple, large brands, can be potential acquirer as well, because this is similar to actually what Tesla does with the car industry.
The way that is potentially applicable, I once built a company by using manufacturers' reps. And the best reps that I wanted, I gave them basically free business that I almost had ready to close and paid them 30% commission on this. So when you go to Otis and you have 10 customers and say, hey, Otis, you want to fulfill this order instead of us, this builds a partnership for what one-time short loss, not loss, but reduced income, but they get awakened to the opportunity. It needs to be investigated whether that's actually a partnership way on how to approach this in the long run.
Yeah, absolutely, Axel. You're right. I mean, all this with 80,000 workers and all the distribution centers, I think it will be a great sales channels to us. And it is okay to give them kind of a good commissions because our gross margins are 50 to 70%. I mean, we can share that.
Okay, great.
It makes me think of there was an opportunity, and this is why that life cycle that I present at the beginning of these, I think is very valuable for these types of situations, because if you look at the end of the life cycle, the last stage is an exit, right? And in your exit, there's a set of criteria, validation criteria that the acquirers are using to know how much they should pay for your business and at what multiple and so on and so forth. And the criteria is technology. So one, they need to know that there's synergy in the technology, or that the technology is safe, effective. The other is culture, right? Is it easy to work together, so on and so forth. And then customers. And this equation, right? These three factors that play into this are very helpful in plotting your trajectory or the maturity path that you take. There was a company that we engaged with a couple of years ago called Delarock, and they sold the card readers that go on public transportation. So, in a touchless world, right, it became important to have these card readers. The acquirer that we went to, initially when we found the company, and this is from a BCP perspective, they were over-investing in the product. And for 5 years had been going through R&D trying to get the perfect prototype. We engaged them and made an investment, immediately went out and started to talk to the potential acquirers. What the acquirers said after talking to them is the product didn't need to necessarily be built at the standard that they were shooting for. In fact, what they needed to prove that it was a viable target for them to acquire is a certain amount of customers in a certain segment. And so they basically said, if you can go get 20 customers in this segment in this amount of time, and they retain for a year, you're a viable company, we'll pay this multiple for you.
Yeah.
Well, we went out and stopped the R&D, stopped the product development, got it to an MVP perspective, went into 25 customers, sold them within the first year. And at 1.5 million ARR, we sold the company for about 49 million. A huge multiple, right? Now we could have kept going and potentially got the company to 200, 300, right? But it was a quick in and out because we found that niche and we found that opportunity, and that impacted the trajectory of the way we built the business. Yeah. So things like less overhead, not a lot of executives, right? We outsourced a lot of the marketing, things like that, because we knew that the team wasn't going to be bought. It was the technology, right? And so we made it suit that. So anyways, not suggesting you need to exit this early and only take 50 million, because you may have a much larger opportunity here, but to give you an example of how important it is to begin with the end in mind and understand if it's Apple, if it's Tesla, if it's Kone, what are their criteria for a potential acquisition, and how do you suit that?
Yeah, Randall, you are absolutely correct. I mean, you need to have that in the mind from the very beginning to understand what are you building to. Different companies have different scenarios. So we hope that the market actually will help us to understand better who are we. So our thinking is not enough. It's the market that should actually help us to have that understanding better. So I hope that with the first product coming to the market and with the perception from the customer side, and hopefully with early talking to potential acquirers, we can understand that better, and then we'll decide what to do.
And Randall, to your point, I was sitting on the board of directors. I was talking to them. They were in the core processor chip development. They had same performance for a quarter of the power or 4 times the performance for the same power. And the prototype was built for 32-bit. And I said, now we are going to find customers that want to build phones or devices that last 4 times longer without recharging. Oh, the market currently is moving to 64-bit and another $40 million into this development. And of course, we never got the dreamed of acquisition. We got acquired, but never for the multiple that the company would have deserved if they would have proven out the market on the lower quality market, because I had done studies and found there was billions of dollars to be made in the 32-bit market if you could prove that you are a quarter on the power. But, you know, focus and making sales is so important.
Yep.
Peter.
Thank heavens for people like you that are willing to just innovate and you know, invent things like this. It's so cool, and I applaud you, and it's inspiring. Very cool.
And now we come to Peter with the full story. You are muted.
Still amazed by your presentation, by the way. Congratulations from my end, if you ask me. It's really fantastic. So I try to catch speed as well and give you some background about what we do. But following your advices, you see from the previous session, let me just start to introduce myself first. I spent pretty much 20 years in manufacturing and made a career over there. And the last part of it, I helped small to mid-sized manufacturers to become more productive by adopting lean manufacturing principles. And I was also privileged to work for Ford Motors company, visiting many suppliers in Europe, and I experienced the same everywhere. So our main job was to help them become more productive and stable. But, you know, I couldn't judge where they are, and they couldn't improve because they didn't know where they are. And the main reason for that, they didn't have data in their hand about it. So, and without data, any improvement is just impossible or inaccurate or based on emotions. So this is the problem we are solving. Helping small to mid-sized manufacturers become more productive by solving their biggest problem based on data. And the problems when we are speaking about inefficiency or unproductivity is starting with unexpected machine downtimes. So only that problem is costing $50 billion every year to the whole of the industry, which, if you want to put it into relation, then this is exactly how much the whole of the music industry produced in 2018. So that's a huge problem on the huge market. And on the other hand, we have this problem. On another hand, we have Industry 4.0, or some part of it is machine digitization, which is a great cure for that. So actually, early adopters are widely reporting that they could reduce 30-50% of machine downtime by becoming digital, by digitizing their machinery. And other reports says other side started showing, I guess. I'm not sure if it's coming from me. Can you hear me, guys?
Yes, we hear you.
Okay, perfect. Yeah, so yeah, and side effects, 30-40% less throughput time, way less inventory, a lot of positive impact on that. So, but there's only one big problem around here, that however these Industry 4 technologies are so cool and for the purpose, they are only available for the bigger corporations, because small to mid-sized manufacturers find them too difficult, too slow, too expensive. So they cannot go for it. And we open this gate for them, and we let them use the latest technologies that is specialized to their needs. So technologies that make solutions like ours really fast, simple, and affordable for them to understand and to use and to adopt. And by that technology, we have them, identify their problems. We tell them, okay, where you have problems, why you lose, where you lose, and how you should improve. For the user, just taking this quote from Nasir from Connecticut Center of Advanced Technologies. For the user, it just seems like a simple sensor that you stack in the machine, and next day on you have your data. So you can use and for efficiency improvement. Yes, it is so simple for the user. It's a bit more sophisticated under the hood. So we are using IoT sensors that are passing data to our servers, to be short. And we have our proprietary machine learning algorithms that would transform this raw information of resonance and magnetic field changes into business critical information. So our fellows in manufacturing can use to boost productivity. So what they get, they will have a real-time dashboard, a clear observation and overview about what's happening right now, so they can react if anything goes wrong. They will receive, very simplified yet very powerful analytics that are crucial for them to understand the problems and drive improvement every day, every quarter. And by this, they can reduce this problem or increase productivity, by that making more profit of 30 to 40%. The business model, so you can compare it to traditional solutions, traditional alternatives, which would cost $6,000 to $10,000 US upfront, and we are offering the best package for our customers for $100 per month. So that's a huge difference. And we are serving many industries, so we are able to serve and have success stories from all this wide spectrum, from injection molding, high tech, to metal and food stuff on the bottom end of it. About the traction, we are serving more than 50 customers. Majority of them are in our region, back in the Central European region. But we started to work together with IKEA and Ford, which will generate us a huge organic growth. We have the first customer in China at one of the biggest manufacturer centrum of the world. And the network is offered for further growth. We started to have the first installation in Canada. We have some happy customers already in the USA who started to scale, and first customers started to land in Mexico, and we are receiving something like 3 leads per day as a result of our current campaign. And by that, I think we can really change from 1 customer per week to 1 customer per day very soon. I mean, in the upcoming weeks. The market is huge, so we are talking about more than 200,000 small to mid-sized manufacturers only in the USA, and the industrial artificial intelligence market is expected to grow 3% every year. Yeah, we have competition, of course. Our technology is a bit different, and by that, so we are way more user-friendly, and we can cover more industries, which is not only opening a bigger access to the market, but we can serve companies who are operating multiple kinds of machines with one system, and that's a huge advantage, I believe, when we speak to them. The team.
I have a question, just on the competition slide. What percentage of the market is owned by these competitors today?
No, they are small guys.
So okay,
yeah, they are having 100 customers and making more than 2 million. We are having already 50. I think we will have this 100 in upcoming 3 to 4 months, and we just need to upscale from there to catch them.
so you're not replacing solutions when you're selling them. This is net new for them.
Yeah,
Got it.
absolutely.
Cool, thank you.
What is the sales cycle? Sales cycle from first introduction of the concept to closing a deal?
Yeah, in the industry, we can have it even in 3 to 4 weeks, which I believe is kind of great. And then we deliver the pilot kit, so they can get data in 1 or 2 days. And they have a short pilot period from 1 to 3 months. If you are together, another couple of months are needed, for deciding for scaling up. So if you add all this together, then we are still speaking about 6 months from first core to scale up.
And you were never burdened or limited that the companies that wanted to acquire the technology said, very great, we want to do this, but we need to file for budget next year because budget constraints or available budget needs to be available to actually deploy most of the technology.
Absolutely. But this is not CapEx. We are OpEx. So there is no upfront investment needed. It's just pure monthly fees. Even the hardware is included. So they don't really have to speak about budgets. So they can start OpEx. They gaining results. And next year, for a huge scale up, they can speak about CapEx.
Sure. Thank you.
No worries.
And in most cases, within 3 months, you're paying for it at that point.
Yeah.
The ROI is paying for it.
Yeah, absolutely.
Are there any trials, or would it be difficult to pilot or trial this?
So we find difficulties, but I think it's 1 out of 10 where we cannot solve it. And the conversion rate from pilot to customer is above 80%.
80 or 8?
80.
Got it.
Yeah. Yeah. This is what we do. Any further questions? Just really happy to.
So I owe you a response from the last time, and I'm glad I got to see this because there's a company I know that's in the textile space that is doing something similar, but I don't think a competitor. I think actually a partner that could help you. Same ICP and everything. So offline, I'll message you about that.
Thank you so much, Randa, for that.
Very cool. And it's hard to go after the Tesla of elevators. So
yeah, absolutely. Absolutely. That was a bit of a challenge. Again, congratulations to that one. Yeah.
Do you think BASF as an organization could have a need for what you're doing?
Actually, BASF, I guess, is rather at continuous manufacturing, and our solution is rather for discrete manufacturing. But it's just a principle, I'm certain they have a lot of discrete manufacturing, however they are at continuous manufacturing sphere. So I think it may be a good connection.
Okay.
As a potential buyer or a customer or a potential investor as well could be very interesting.
Yeah, because a friend of mine works now in a sub fund from formerly BSF Ventures. So I'm more than happy to make an introduction, but you need to send me an email as a reminder.
I will do that.
And then let's see where that goes. And he's now back in Germany. He used to be in Silicon Valley. So yeah. There is, and then I think I have still the contact with Vata Venture Funds, Vata Batteries. They need to be in the manufacturing space, and Bosch.
All of them sounds great. And Bosch could be one of our acquirers, I guess, at the end of the day.
Perfect.
Thank you so much, Axel.
You're very welcome.
Thank you for your feedbacks and yeah, offers as well. Thank you so much, guys.
Did you come to the end?
Yeah, I'm all right.
Okay. Thank you so much. Absolutely fantastic. And I always enjoy this type of great story. And it reminds me of one of my business was acquired by a company called ArcSight. ArcSight did what you did for the security industry. Their Hall of Fame was they called themselves the Switzerland of security devices because they built software connectors to any equipment, whether it was an IPS, a firewall, and reported it all back into an aggregator software. Normalized data, it's the same exercise. Yeah. Normalized data out of which you can then make conclusions. In their case, from intruder events or abnormal behavior. In your case, downtime, machine failure, and everything else. Yeah, so you're the Switzerland too for the manufacturing industry.
We can say that, absolutely.
Yeah,
yeah, absolutely.
Absolutely great. Danny, are you ready to present? You're muted right now, Daniel.
Sorry, can you hear me now?
Yes, we can hear you now, okay. And now you can share your screen. And here is the octopus.
Can you guys see? You can see me sharing the screen, correct?
Yes, absolutely, we can.
All right, awesome, guys. Well, once again, I'm delighted to be here this afternoon, sharing the octopus with you guys. And I'm more than happy to talk a little bit about what we do and how we're going after this market. So our main mission, like I said earlier, is Octopus is democratizing food on demand for Latino and minority-owned restaurants so that they can have the same end-to-end e-commerce capabilities as some of the world's largest restaurant brands. Right now, the biggest issue that these restaurants are facing is the fact that, technology has become such a large part of the industry. And now you have all these different online services, you have all of these different, marketing agencies, you have all of these different devices that you have to deal with just to get an order from the customer, right? You have DoorDash, Uber, and Grubhub. Plus, on top of that, all the restaurants, they have to go ahead and build complicated online menus because you can't really transact business online the same way that you transact business inside the restaurant. You can't go online and ask them to, switch the sauce, add other different types of meats, all of those things. So they find that to be very complicated. The Octopus solves all of these problems for them. So we have a smart solution and smart technology that actually takes their menu and we use templates that we've already created to make it very, very simple for them to deploy those menus throughout all of these different platforms, right? We use APIs to connect to Uber, DoorDash, Grubhub, you name it, no matter what platform they have. Plus, we also help them manage their virtual business listings in Google My Business, in Yelp. And on top of that, we want to start getting into doing some marketing for them as well, because now they're coming to us with other problems that they're facing. Over the last 5 years, the market, like I said, has become way, way more dependent on technology, especially after COVID hit, right? And now everybody is ordering online. I don't know a single person that isn't going online and doing this. Adoption has just become way, way bigger from customers. And oftentimes, the restaurant either adopts technology or they're forced to go out of business. According to Euromonitor, the whole world market for online ordering and delivery is a $1 trillion market. However, we are going after Latino and minority-owned restaurants in the U.S. and Latin America. So, we're looking at about 150 billion combined with a total revenue process of 13 billion, which ends up putting in our pockets, $750 million out of all of it. And to the side, we have a little table here that explains essentially how we would grow and what a revenue would be like from our SaaS model that we've adopted. This is a visualization of how our software operates. We have all of the different online services, all of the different aggregators at the bottom and business listings. And the Octopus basically manages all of this. It makes it very easy for the restaurant to interact with it. To the left, we see an image of a typical restaurant, right? They have all of these devices, they have their POS systems. It's a nightmare. Trust me, it sucks. And then in the middle, we have the octopus, right? We have a very simple interface where they can track all of their revenue. They can track all of their orders. The system is automated. So anytime an order comes in, the restaurant doesn't have to touch anything. It prints automatically to the kitchen in a standardized, receipt designed for kitchens. We also, like I said, help them with business listings and menu optimization so that the customers have an easier time ordering, and it also eliminates a lot of the error charges and refunds, and just like customers will always find a way to get money back if they're not satisfied with the product. And DoorDash makes it very, very, very easy for customers to complain and get refunds. And the messed up part is that the restaurant ends up paying for those, even if it's not the restaurant's. We adopted a monthly SaaS subscription model.
That's an alternative.
So right now we have
the restaurant eats the cost for the bad order. That's crazy.
Mm-hmm.
So
even if the driver
DoorDash refunds you or whatever, that refund is coming from the restaurant.
Correct. Yeah, they deduct it. They call it error charges. So even if it's the driver's fault, right? Even if he forgot the drink in the car, the restaurant still pays for that mistake. So that's part of our service too, is that we actually help them eliminate those charges, and we have a team that's specifically doing that for the restaurant as well, getting those error charges back. So we adopted a monthly subscription model for this. We have the $99 a month, $199 or $299, depending on what type of service they're looking to get, and the higher they go up, the more catered the service is. Plus, we also charge a $750 setup fee that helps us recover some of the cost of acquiring the customer, the onboarding cost, the hardware cost for the tablet and the printer. And this is how we managed to scale, over the last year, bootstrap. Plus, we also offer them 30 days completely free. We don't take a credit card or anything like that. And if they don't like the service, they can tell us, hey, you know what, get rid of the stuff. I don't want to deal with you. And I'll go back to the, all the tablets and devices type of thing. Luckily for us, we have a very low churn rate. We've only had approximately 4 restaurants out of the 100 restaurants that we've onboarded, leave the platform. As I mentioned earlier, over the last year, 2021, we've grown pretty exponentially with very little revenue. We are now in 17 cities across California, mostly in the Bay Area and Central Coast. We've onboarded about 100 restaurants combined. And we've processed over $3.5 million in online revenue for all of these restaurants. That's all the revenue that has gone through Octopus. Over the next 5 years, the Octopus will become the biggest end-to-end e-commerce solution used by small business across the U.S. and Latin America, right? I come from 8 years of restaurant experience. I've done every job in the restaurant industry, from dishwasher all the way to, managing. I've also started another on-demand delivery startup back in 2018 called Santa Cruz Deliveries that I actually grew to about 5 dozen customers, and it was delivering to universities. This is my team, right? I am the CEO and the founder. Then I have my chief operating officer, that is Awais. He's got 5 years of e-commerce management. He's got a BS in information technology and an MS in business management. Prem is our CTO. He's got about 25 years of software development experience, cloud, APIs, you name it, right? All of the full stack. And then we'll actually have some really great advisors. Rob has actually been an advisor and an investor. He put in about $15,000 that allowed us to build the initial MVP, and then we took it to market, and then we sold it around to all these restaurants. He's a serial entrepreneur, and he's actually has vast experience growing in managing a startup. And then we also have Christian, who is our CMO, or he's looking to become our CMO once we reach funding. And he's got about 20 years of experience marketing and growing, once again, a food tech startup as well. And we're asking for about $2.5 million on a safe for about 25% of the company, so that we can scale the team, get to 500 restaurants, do a little bit of rebranding, because the Octopus is not the most appealing name right now, what I keep hearing. We want to develop additional services, right? We have restaurants coming to us saying, can you help us with, marketing on Facebook, social media? Can you also help us build websites? Can you help us find, additional services like accounting or, people that build little menus on inside the restaurant, the screen. So we want to do a lot of that stuff as well to continue scaling and offering more services now that we have this trust from these restaurants. Thanks so much, guys. Let me know if you have any questions.
I have a technical question. One of the problems of all the online apps is that the delivery time, the cooking time, especially when you have disparate platforms with all the little tablets there, are never synchronized with the reality of the restaurant's current operation. Do you provide in the backend, since you are rolling up everybody, enough information that you can over API, whatever you use, feedback on Uber, actually the delivery time this time is 25 minutes versus a preset timing?
Yes, we do actually. So we have something called pause mode, and we also have busy mode. And the system and the restaurant can determine when that's busy. If you have 10 orders backed up, the system will automatically add additional time based on what you set out, based on your per order timing, so that you have additional time, and it communicates with all these different platforms that, it's going to take longer.
Great. Randall.
Such a cool business. And I was a strategic advisor for Hot Schedules. I don't know if you've heard of that company. They're in the restaurant space, and they do scheduling for servers and bartenders, things like that, and food orders. So I could help you with connections in the space. Just want to put that out there. So just so I understand, what is your customer profile today, and how many exist in the market?
So I myself, I'm a Latino, right? And I come from Latino background. I know Spanish. Anytime that I walk into a Latino restaurant, it's very easy for me to sell them the service because they trust a guy like me. So our market is, Latino and minority-owned business owners. I know what they want. I know what they need. Right? My mom's a restaurateur. Her friends are restaurateurs. I've done this for them in a much, much, much smaller scale, right? I was part of that geeky nephew that I said earlier today, where they would come to me and ask me to do things for them. So that's where we're going. And lucky for us, that market is growing exponentially every day, right? Like, I don't know if you guys are aware, but Latino business owners are growing 34 times faster than any other business out there. So this is an untapped market yet, and everybody's kind of, not really looking there, right? They're focused on, like other nationalities, right? Like the mainstream stuff, but they're not looking at the Latino or minority market. So that's the one that we're going. It's a, $1 trillion market for sure.
Yeah.
But that doesn't prevent you from going after the Indian market either, right? So I will take your deck one day, and actually I will email it to my favorite Indian restaurant here around the corner. Because there are 10 tablets sitting there ridiculously, yeah. And maybe I can see whether you can make a sale there.
Absolutely. You definitely know what the problem is. You've been there. I'm pretty sure all of you guys have been to that restaurant that has all these tablets, and they're always beeping.
Yeah.
And quick comment on your pitch, Daniel. Now, you have meat in slide 10. You need to bring it like at least to slide 3, because you start great, but then you get into too much details about the global industry, and people don't care. People look at you. If you can quickly convey the impression that you're a fundable person, they don't really care too much about the rest. But if you talk like a professor or you're lecturing in an university, then that's good. That's good for imparting education, but that not be best for getting funding. So you have to quickly shape their perception. Your pitch sounded theoretical. In the middle, people were losing interest. But the moment you said you have $2.5 million, you did that, we got the interest back. But you know what? On a deeper level, once the interest goes, it's very difficult to get it back. So you just got to put the solid, meaty stuff, the traction stuff up front because you already have it. So why not, boost yourself with that?
Okay, thank you. That's great feedback. I will.
Yeah, this is it's just really cool what you're doing, especially considering what's happened to this industry, considering COVID and everything. I mean, that to offer a solution like this that could provide a considerable ROI and increase their lifetime as a business is admirable and a good journey to go down. Not to mention, part of understanding the ecosystem is understanding the incentives that are around the industry, right? And the total cost of ownership for something like this in relation to a business, right? So someone mentioned CapEx, OpEx, right? Like looking at the budgets and where this comes from. And what I found like working at Hot Schedules and advising them was really about being able to definitively show an ROI and also balancing that line of educating them about how they should be running their business. And in part of that pitch, right, you're going to be exposing some things that they may or may not be doing. So there's emotional strings there that are very delicate to go around. So to overcome that, just kind of getting to the end or a quick insight is we let other customers tell those stories. So in our marketing, and you have here like launch marketing campaign, rebrand and everything, it was very important that we not sell as Hot Schedules, but that we have our customers sell the benefit for us. So a lot of our marketing material was like situation, opportunity, resolution. The situation in the restaurant was X, all right? And you want that situation to be relatable to the majority of your market. The opportunity is this. And in many cases, they don't even know that they're doing something wrong or that there is a better way. So highlighting that opportunity in terms of whether it's time, money, savings, whatever it may be, is important. And then showing the solution or the resolution to that situation and opportunity. It's natural to want to just show the resolution. Hey, we could do this, but they really haven't even quantified what their problem is, how much it's costing them, things like that. So I'd be happy to talk to you offline as well. It's a really cool business you have.
And Randall, to your point yesterday, the associated business opportunities that can be put together, I see one opportunity. The in-store sales are done over an independent POS system. So a Rebel, for example, up in Northern California could be a co-partner of this. And because you get also extra information when you connect to the Rebel, because the sales that are happening right now inside the store need to be combined for your analysis what the delivery times and cooking times are. And they are a perfect going-to-market partner, which can leverage you immediately out.
Yes, you're very right, Axel. And we're actually already going after POS integrations. We have a couple of them already lined up, and we already are integrated into a few of them. We have, I don't know if you're familiar with Clover POS system. They're vastly used by the Latino community, the Latino restaurateur community. The next one that we're going after is Square and Toast. So we are in early talks to integrate into those services as well. We would love to get an introduction into Rebel if that is something that you can facilitate.
I have to look up. I had a former administrator in my venture fund that started to work as a product manager at Rebel. I need to see whether he's still there or is willing to make me the introduction. So stay tuned. You connect with me up as well, axel@pitchglobal.com. Maybe even I do a joint call with you and Randall. That seems to be working out extremely well when we do this. And then I have all the information already done for you.
Please, that'd be awesome. I went ahead and I sent you the pitch deck as well. And I also sent it to Stars at Pitch Global. Randall, if you can share your email, I'd be happy to send you a copy of the deck as well. And we can keep the conversation going.
So I think we are coming to the end of today, Casey, right?
That's right.
Yeah. So my great thanks and gratitude go out for Randall from Boss Startup Science, Boss Capital Partners, as well as Jill setting it all up and helping us on the coordination. We had a prime event today again, and we love the companies that we heard. I mean, it's so amazing what people come up with, right, to improve lives in general in each specific industry. Some of them sound more enticing for the general public, but when you drill in like into Peter's story, there is a lot of money that can be made and a lot of value being generated. So thanks again for Randall and Jill, and thanks again for Casey, who built initially Pitch Global, gave me the opportunity to work with him, become friends with him, join philosophers once in a while. And Randall, I give you the floor for the final word from Boss Startup Science.
Oh, I mean, what another great event. And I mean, there's no place I'd rather be. It's so inspiring seeing these businesses. I'll share. Jill and I were messaging each other while this was happening, and it's amazing, the startup ecosystem, how many businesses exist. And every time you hear someone saying, man, I wish that would be invented, the reality is it likely already exists in the startup ecosystem. It just hasn't gotten to market. So being in a forum like this to help those types of companies get to market that are really changing people's lives. I mean, literally every founder that presented is doing something admirable. And, I'm just inspired by it, and keep going. If there's any way I could help, or Jill or someone at Boss Startup Science, we'd be happy to.
Fantastic. Casey, you have the very final word today.
Axel, that's yours. Please.
Oh, okay. Thank you so much. So very often I feel, and Boss Startup Science has really made it a science of what I learned the hard way. I wish Boss Startup Science would have existed already all the way back in Germany. I used to joke that in Germany, people are holding up a Coke bottle and say, you see how beautiful it's shaped? You need to buy it. And coming to the US, there was a 10-year transition phase where I learned the hard way how the thinking is different over here. And then going to Silicon Valley, and then with Casey together, listening to hundreds of pitches over the last 5 years, that's where you see the pattern. I remember that Greg Shepard from Boss said he is connecting patterns, right? And I love this because it dawned on me. That's where I'm good at, connecting the dots. And having this on so many cross different verticals, it really enables us to give the right advice, because so much information is transferable from one market to another, because it's a principle that actually matters. Yeah, no, I don't have to build a springless elevator myself, but I can see how it can go to market. I don't have to build automation of machinery to actually find the interconnect, but I understand by just having been at ArcSet what they're doing and how they got to the marketplace. This is what is the beauty about this event. Boss Startup Science, we are so thankful that you have put a methodology and a training course around this, what counts, which makes a difference between failure and success in my eyes. Yeah, and that's what we need to give to the market. This is where Casey and I also live for in Pitch Global. That's why Pitch Global, our next event is next Friday at UC Berkeley. Those who still want to pitch there. We don't pick winners there. We actually encourage, everybody is a winner just by starting out. But can we help them improve? Can we find them investors, or are the investors giving them mentorship? Because the average time it takes, I always like to say this, is 6 to 9 months. You don't actually pitch and get money right away, right? So, and it's like dating, right? A love affair. You don't go to a restaurant and expect that she becomes tomorrow your wife. It's unrealistic, and people want to see how entrepreneurs react. And this is what we live for. Casey, I see now we have in Boss Startup Science an equal partner with the same mindset. Thank you so much. Everybody have a great weekend. And we see for the next masterclass in March, everybody back again. And we see many of you on next Friday together with our event with UC Berkeley. Casey, any final words from you?
We are also launching Euro Startup Day. So it's going to be huge. We are so inspired with 15 Hungarian startups backed by the government officials who came to our event. And we have strong inquiries with other European countries. Axel, you just talked to the German Consul General, right?
Yes, I talked to the Consul General, and we are pivoting and open up the valve. The problem, which I have found in many discussions, is not only related to startup companies. Mid-sized companies that were started in Europe do not approach the American market the way we are trying to teach this here. If you are $50 million in Germany and you held up your Coke bottle because it was very beautiful, then this is not the methodology how you will actually enter into the US market. And nobody is actually safe from this failure. The reason why Siemens never really conquered the American market, because consistently they want to have European, German philosophy transferred in an American marketplace, and that does not work. That's the same reason why Daimler-Benz had to give up Chrysler again. They wanted German behavior pushed onto an American corporation. And we can help there. We have been there. I came from Germany 31 years ago, and it was a hard lesson to learn how to actually make it happen in the United States. So we are very thankful. Casey's great idea to open up our doors to the European marketplace, and this will be a great event.
Thank you.
Thank you, everyone. Thank you.
Okay. Bye-bye, everybody. Until the next time.
Bye-bye.
Thank you guys.
Bye-bye.